Good afternoon and welcome to the Accendo Traders Group. This is our weekly wrap-up trade plan for June 22nd, 2008. AccendoTraders.com, effective trade plans delivered daily. Each weekend we come together to make sure we're going to be on the right side of our trades, and we do that by going through the same routine, checking our open positions, checking what's coming down the pipe as far as market moving news, reading some blogs, some newsletters, see what some of the experts are saying about the state of the market, checking sectors to see which ones are trending up or down, scan for new trades, set alerts for those new trades, and as always, we want to make sure we have time to spend with our families. So as we reviewed last week, you can see all the major indexes were down for the week. The market dropped 3.5%, 3.1% this week, basically off a very volatile trade. The renewed concerns over the write-downs in the financial sector has come back to the market. Goldman Sachs had released a report stating that the banks are going to have to raise billions to cover their right then. Several banks kind of confirmed that. I think First Trust Bank was one, and even Citigroup. That's what the C here is for. Citigroup released some reports talking about how they're going to short their balance sheets and raise some money. Some banks are cutting their dividends. Also, Moody cut the ratings on the bond issuers and back MBIA, but that's nothing new. So with the company reports coming out with, especially in the financial sector, about concerns about the market, don't forget the auto Ford talked about not being able to make a profit in 2009, and GM had some concerns. So those type of news, those type of report took over the leading the market compared to economic data. The inflation concerns continue, as you can see here. But as we know, that the Fed has been, already forecasting that right now they're focusing on inflation. So, and that rates are pretty much, the cut is over. So that also might play into why the economic data did not really move the market this week. Crude ended up unchanged, although we did rally to an all-time high level intraday, but we basically finished the week unchanged. This week we got nothing on Monday. Consumer confidence on Tuesday, and then we've got the big boy, the FOMC policy on Wednesday. But again, the Fed has been forecasting that they're pretty much not going to do anything. So it probably may not have the same impact that it did in the past. However, what we saw, remember last month when the minutes were released, that if we change the language, that there's some change in language, that can move the market. So we're not looking for moving the market off a rate change. We're looking for a move of the market based on their language. And then Thursday and Friday. So again, tomorrow we don't really have anything on the economic front. Walgreens is okay. As we begin to look at our sectors, this is definitely one of our more to the downside list in a while. So first we got hotels, and they're kind of all over the place. Certainly they look bearish, but I'm not putting them anywhere. They're kind of consolidating. Basic materials, definitely by definition, we got to bounce off the 50 here, bounce off the 50 here, even got to bounce off a 20 here. But you can see, as we dive in closer, we can see that we've got a failure here at around 561. We tested it here, failed. Tested it here, failed. Tested it here first. So that's sort of a triple top here. So certainly, continue to go bullish. By definition, bullish, but certainly have some reservations. Definitely needs to clear this 560 range. Utilities, looking like they're ready to get a push lower, looking like the Dow and the S&P there. Builders, weak. Casinos, weak, definitely bearish. Coal, one of our stronger sectors right now, definitely looking bullish. Nice retracement back to the 10, and for the most part, this 10 and 20 have held up as support. Rising 3 pattern going on here. So by definition, coal still bullish. Banks, as we know, driving the market down this week, bearish. Biotech, kind of in a consolidation pattern, so I'm not going to do anything with them. Here's pharmaceuticals, bearish, looking like they're getting ready to push for a leg lower here as we break this 280 range. Internet, for the first time, I'm going to go bearish. When last week we said maybe, and now we're going to go ahead and confirm that this is bearish. Definitely lower highs being made here, and looking like we're going to get a push lower below 200. Gold, sort of bullish. Last week we talked about bearish if it breaks this key support level, and what did it do? It bounced. Possibly hit the resistance and coming back down, but won't go bearish until we break this 175 range. Software, by definition, certainly bullish. You can see the 50 held up as support here. Here we are back once again, but we have a lower high now. We had a double top, lower high, sort of a head and shoulders pattern going on here. So I'm putting this one in the middle. By definition, bullish, but definitely looks weak. Insurance, weak, bearish. Oil services, by definition, still bullish, but you can see it's been consolidating for the past month or so. Retail, weak, bearish, looking like it's getting ready to push down, looking like the Dow and S&P. Stocks, the semiconductors, definitely bearish. Last week we talked about this key support level. We bounced, and now we're right back at it. So let's see if we push lower. Transports, weak, continue to make lower highs. Brokers, making lower highs here. You can see testing down here. Bearish. Natural gas, by definition bullish, but also consolidating for the past month, sort of like oil services. And finally, oil index. I'm also going to go bearish here too. So bearish is utilities, builders, casinos, banks. Okay, and now we're ready for the education portion of our video. We're using the book Trading in the Zone by Mark Douglas, and we're on the 3rd chapter, Taking Responsibility, and talking about shaping your mental environment. And when we got together last week, we were talking about that becoming a successful trader is not as much about technique or market knowledge. And that is the mistake many of us make, that we go down and we try to learn so many different strategies and so many different indicators, and we think that the more that we know, the better trader we'll be. Now, I am obviously not saying that you shouldn't know as much as you can about the market. That is not what we're saying here. What we're saying, though, is that understanding indicators, or more importantly, learning them and learning all these different strategies, is not what's going to put you down the road to successful trading. It's having the understanding in your mind about your relationship with the market that trumps everything. If you don't have the right mindset, then all the knowledge you have in the world doesn't make a difference. You can look at all the sports around the world, and you can see that, when people get in slumps, especially in baseball, there's a lot of superstitious things going on. And about a month ago, there was a lot of talk about Giambi's thong and that they wear that. But what it comes down to, in the zone, the Michael Jordans, the Tiger Woods, and everybody who are in the zone, it's really about, I felt like everything I hit was in the fairway. Everything I hit was in the middle of the cup. Nothing but net. It's really about having the right attitude. So Mark goes on to say that attitudes produce better overall results over analysis and technique. Of course, the ideal situation is to have both, but you really don't need both. The right attitude is more important. It's more necessary to be successful as a trader than understanding all of these indicators. And you see that sometimes in the videos. Sometimes we go through every indicator, all of my template buys, and, we go through everything, looking for confirmation. And sometimes it's just, all right, here's the price graph, and, move on. One of the people that I look up to, Mark K. Latimer of Better Trades, she used to talk about when she first started trading, all she traded was the price graph. So she didn't have, didn't use every indicator in the world. It's about understanding that I feel like this is what I believe in, and that this is going to work out. And if it doesn't work out, move on. So having more knowledge certainly can increase your chances of being successful, but it's not everything. It's sort of like fundamentals. In basketball, there's some people who are naturally gifted. There are natural athletes. I remember they used to talk about Herschel Walker. And he said he never lifted weights in his life, but he was a beast. And a lot of times athletes are natural at it. They just have a natural gift for that particular sport. And sometimes as they get older, Michael Jordan learned the jump shot. He learned some more of the fundamentals, although he went to college. Well, obviously, Dean Smith taught him fundamentals. But the point I'm trying to make here is that fundamentals, technique, analysis can improve, but it starts off with an attitude, starts off how you naturally interact with the market. And I know that sounds simple, and Mark goes on to say that for those of you who have been struggling, that might sound ridiculous. But winning in any endeavor is mainly a function of attitude. Being a winner is more about how you feel about yourself and how you feel about the world around you than it is, whether you win on every trade. So I want to thank everybody for watching. To get the full version of our podcast with all the segments, you can go to our link, accendotraders.com, subscribe podcast.html. That gets you all the segments. To subscribe to our podcast, to subscribe to our video trade plan, you can go to the buynewsletter.html. That's how you can get the daily installments that we have to help with your trading. As always, we appreciate your feedback. And tomorrow we're going to be unveiling the new blog, so I hope you guys will check that out tomorrow. Tomorrow will be the new boot camp that we're going to have in our blog. So thanks, everyone. Trade at your own risk, and I will see you tomorrow, those who are subscribers. Otherwise, I'll see you next week.